The Business Advisory Group presents a webinar series, Surviving, Thriving, and Growing Your Business Through the Pandemic. Each of these webinars features New England ProVisors members. The Business Advisory Group connects professional expertise within the ProVisors network with the resources that business owners need to improve the value, efficiency, and profitability of their businesses. Each of the sessions, starting on September 29 and continuing through November 18, feature ProVisor experts in each of the categories noted. All of the sessions begin at 2 p.m. Eastern and will be rebroadcast over our YouTube channel. We hope you enjoy the sessions and contact each of the experts if you have questions that are important to you as a business owner. Thank you.
Well, it is just after 2 p.m., so I always like to get started on time. So I would just like to begin by welcoming everybody. My name is Dominic, and I'm the owner of Elevate Business Coaching. I'm excited to be with you today, moderating our discussion on finance and banking relationships in a changed world. And this is actually the first in the series of weekly webinars for business owners. And it's all based around the theme of surviving, growing, and thriving through the pandemic. You can see here from your screen that there's a series of 8 topics, and they're pretty much going to be going every Wednesday from now until November 18th. I think the exception is the week of session 7, the week of November 10th. So with that, I just wanted to mention just a few suggestions as you're with us today and you're viewing this particular session. On the top of your screen, under View Options, we suggest that you uncheck the side-by-side mode and set the zoom ratio to window, and what that will do is allow you to see everything. So let's get specifically to our session today. So today we're really going to be covering three topics that are, well, one topic, which is finance and banking relationships in a changed world, and we'll be hearing insights from our panel here on financing options that are open to low to mid-market companies. We'll be hearing about how lenders are reviewing new and existing business loans. And thirdly, we'll be hearing about alternative sources of financing. So before we begin, I'd like to introduce our all-star panel. Gabrielle, would you mind introducing yourself, telling us just a little bit about your background and the perspective you'll be bringing to today's discussion?
Thanks, Dominic. Good afternoon, everybody. My name is Gabrielle Piasio. I am a commercial lender on the Greater Boston team of BankProv. We are a regional bank focused exclusively on commercial financing. Specifically, our team focuses on general commercial lending, some investment real estate, primarily financing sponsor-backed business acquisitions with a focus on companies 1 to 5 million in EBITDA, as well as renewable energy projects. So I'll be talking today a little bit about what we are looking at differently for new customers and the conversations that we're having with our existing clients.
Terrific. Thank you, Gabrielle, for being with us. And Mark, do you want to introduce yourself?
Yeah, sure. Thanks, thanks, Dominic. Good afternoon, everybody. I'm Mark Diebus. I'm a commercial lender at Middlesex Bank, and I've been providing project and asset finance for the last 26 years. I lend to businesses with revenues in the $5 to $100 million range in industries that include med device companies, construction firms, transportation and logistics companies, and a variety of manufacturers, as well as to private equity firms with investments in those types of companies. We're different from a lot of banks in that we are cash flow lenders, which means that we lend money based on the business's earnings and not necessarily based on the assets on their books. Happy to be here, and thank you, Dominic and Lee and Warren, for asking me to be on part of the series here.
Great, excited to have you here. And last but not least, Ernie.
Good afternoon, everybody. I'm Ernie Brown. Again, Dominic, Lee, do say thank you to you for this opportunity. My company is Business Funding Northeast, and I work with companies that trying to establish working capital in order to fulfill orders and expand and grow, or people trying to buy investments that are having difficulty bringing it together and meeting the bank's criteria. The alignment I have is really to work with these people in order to get them so that they're bankable. So I have a great alliance with the banks. Sometimes people come and talk to me, and the first place I send them is to a bank because they've been talking to the wrong one. So I hope today that you're going to be able to learn some of those things as we go through this process. And it's a pleasure being here, and I do thank you.
Happy to have you here, Ernie. And I would be remiss if I didn't mention the man behind the curtain, who actually is not behind the curtain right now, Lee Adelson. Lee, do you want to just do a quick intro of yourself?
Yeah. Thanks, Dominic. Good afternoon, everybody. Welcome to join us this afternoon with a great panel. I'm Lee Adelson. I'm a financial advisor with the Bulfinch Group. I work with professionals and business owners, protecting their income and assets, providing insurance-based strategies to help them grow and protect their wealth.
Terrific. And let's jump into it then. So financing, it's an important topic. And interestingly, just in preparing my research for today, I learned a few things. I learned that 30 million small businesses is what we have in the US, and small businesses are defined by the SBA as having less than 500 employees. 60% of small business owners are not confident when it comes to finance and accounting, and 29% of businesses in the US fail due to a lack of capital or cash flow. So our hope is with our discussion today, our experts are going to help highlight what businesses need to be thinking about and the action that they need to be taking to ensure that they not just survive, but that they also thrive and grow today. So once again, if you have questions, Lee is going to be handling the chat, so just pop the question in the Q&A, and we are going to be recording this session as we go along. So I wanted just to kick things off. Mark, we all know that the government lending programs have kind of been key for survival of a lot of companies as we've gone through this pandemic. But I wondered if you might just start by just giving a quick summary of like where do things stand from a government program perspective.
Yeah. So there's a number of government-sponsored programs. First of all, the one that probably everyone is most familiar with is the PPP, the Paycheck Protection Program, which we all know started at the beginning of April with the appropriation of $350 billion. Funds quickly ran out in less than 2 weeks on that round, and a second round of $310 billion was approved by Congress and the President, and that program opened up again on April 27th. That round ended on August 8th, but on August 8th, when the program ended, there was $135 billion left unclaimed. So it seems like every business in the country that was eligible and motivated to get a PPP was able to do so. Forgiveness applications have and soon will be accepted by banks across the country. We're hopeful that Congress legislates that all loans below a certain threshold, we're hearing $150,000, will be automatically forgiven. Those loans make up about 80% of the total number of all PPP loans, but only about 28% or so of the total dollar amount. And there are talks of another round of PPP with some different qualifications standards this time around, but they are being discussed in Congress, but nothing is concrete as of yet. Some other programs are the EIDL, which is the Economic Injury and Disaster Loans from the SBA. That provided some limited financial relief to businesses. More recently, the Main Street Lending Program was rolled out, but that's not nearly as popular as PPP or EIDL. In fact, there's only been 3 Main Street loans closed in all of New England, 2 in New Hampshire and 1 in Massachusetts, and just 120 nationwide. So, clearly Treasury and SBA didn't get that one quite right. So finally, there's the SBA's traditional 504 loans for real estate and their 7A guarantee programs. Those are still available. And there's also a recent program from the Federal Home Loan Bank of Boston called the Jobs for New England Recovery Grant, where companies can request grants through their existing bank of up to $25,000 or $30,000 for veteran, minority, or women-owned businesses. So there are and have been sources of government-sponsored funding out there, and they have been available, and we hope to, continue to see that availability there.
Yeah. So Mark, I have to ask, what about PPP 2.0 or 3.0? What are your thoughts? Anything in sight there that folks should know about?
Well, there's certainly been talk about it, and what we're hearing is that I mentioned that if it does come down the pike, that it'll be a little bit different qualification standards. We're hearing that businesses that have had more than X% impact on revenue will be eligible to apply for that PPP 2.0, if you will. But again, it's all in Congress's hands right now, and we know how much the House and the Senate are really working together to help the American people through this. So we'll have to see what comes of that.
Yeah, have to wait and see on that one. It's not something that's on your desk. So we talked a little bit about government programs. So I wanted just to ask the question. In this environment, are banks are they open to lending in this environment? Gabrielle, would you like to take that one?
Sure. Thanks, Dominic. The short answer is yes. And the longer answer is somewhere between some and most. And I think it sort of depends on the bank and their risk profile, but also a lot depend on the industries that they tend to see. I think a lot of banks are pulling back a little bit on anything hospitality, restaurant, hotel, and event related, just until we see how that kind of stuff shakes out. Maybe fitness centers and things like that are a little bit harder to do right now. But our team at the bank has been having a record year. We've been able to stay actively lending throughout the entire summer. I believe Mark has as well. What we're seeing a lot of, interestingly enough, is we do a lot of M&A financing, but what we're seeing is a lot of existing companies buying on competition more so than new owner transition acquisitions. But a lot of new deals happening for sure.
So that's interesting. You certainly you've been open for business. You've had some new opportunities, and you've had some businesses that are using this time to maybe expand or require additional financing to exploit some of this. Could you maybe just talk a little bit more, kind of about the deeper dive that you've been taking versus with new clients versus maybe 6 months ago?
Sure. Yes, we're definitely having a lot deeper conversations than we may have previously. Digging a little bit deeper into the impact, whether it's positive or negative from COVID-19, because we're certainly seeing both depending on the company and the industry. If it was a negative impact, then what is your recovery plan timeline-wise and strategy-wise? Really looking at cash flow budgets, 13-week cash flows, and who are your end customers and what industry are they in and how are those industries impacted? Did you have layoffs? Are there supply chain disruptions that are affecting your business? Are there government restrictions because of COVID-19 that are preventing you from operating at capacity? We see a lot of that in the healthcare space, and really great to see that there's telehealth available right now, but and insurance is covering that, but that might not be the case forever. So same thing with companies that have had a positive impact during all of this. When do you expect to return back to your normal? And we're probably going to underwrite closer to the norm versus this kind of peak performance. A lot of things like that we're looking at, doing a deeper dive into the new deals that we are looking at.
Yeah, so it sounds definitely like taking a deeper look, looking at customer concentration and the impact that this is having on their business. And as you pointed out there, some of it's positive, it's having a positive impact for some. Mark, can I kind of ask you the same question, at least in terms of how it comes to renewals and modifications, about how you're looking at things differently today versus
Yeah. So like Gabriel, we're also, taking that deeper dive, getting really into the weeds with our existing customers as well. And, similarly, we want to know, how many layoffs or furloughs have there been? How many of those people are back? What's the plan to bring them back? Have there been supply chain disruptions? How have they worked with their vendors? And what's the short and medium term outlook? That 13-week cash forecast is key, and we're asking most borrowers to provide that to us, as well as a reforecast budget. With the existing customers, there's been a need to work with them on things like payment deferrals. So deferring principal and interest payments on their term loans for some period of time, and working with them through their covenants for the second and upcoming, as of tomorrow, third quarter covenants, which, covenant violations are almost a given right now among borrowers, and we realize that some or most of those violations are because of the impact of COVID. So, I think it's very important to have regular open conversations with our customers and understand where they are in this cycle and where the light at the end of the tunnel is.
So if I'm kind of playing back in my head what you just said, it means like you're really staying extremely close to your customers. Like there's dialogue going back and forth constantly about how this is impacting them, and this is one of those times where you're constantly in contact with them.
Yeah, that's right. I mean, the 13-week cash forecast is a good exercise for them to go through, and then to track that accuracy, how accurate were they 3, 4, 5 weeks ago, and they can use that as a tool to help them in their forecasting. But we're really looking, everything that Gabriel said, as well as how strong is the management team. And what's the plan, really?
What's the plan?
Yeah,
So
kind of one more thing on that plan is some of these companies that have been around for a while, what did you do during the last recession? Did it work? What are you going to do the same or differently again? How quickly were you able to pivot your business? And so that's certainly a frequent question we're asking people as well.
That's interesting in terms of this is not the first crisis that we've had. It's maybe the first of its kind, but yeah, there's been quite a few over your careers, I'm sure. Ernie, I wanted to turn and ask for you, because you've been sitting there quietly and patiently. I'd like to provide you the opportunity just to weigh in on this and on how things look from your non-banking perspective, I guess.
Well, in complete agreement with what Gabriel and Mark are saying, everything takes a very close look when something like this happens. Non-bank lenders, non-bank finances typically look at moving the credit risk of whom they loan to or who they fund to that company's customers versus them as a client. The other thing they do is they want to look at the value of the collateral. So as examples, right now, real estate has stayed very strong. A lot of equipment has stayed very strong. Equipment in the restaurant industry, that's going to be kind of a pothole. So you're going to get some of these different things you got to look at. And then the other effect that you have is the shockwave that goes through the credit ratings of all these companies, because now you have some that are on the retail side, the hospitality side. So what did that do to all of these? Because that's what a lot of the non-bank finances depend on to fund. So right now, that's starting to become, people are getting a good handle on that. They're starting to identify it. That's moving along. So there's still a lot of funding moving on in the non-bank side. What is surprising, and I can say this personally, is that I've probably seen more requests from applicants that should have been talking to banks or not talking to me. It's just they weren't talking to a bank that really wanted to work with them. So there is a lot of lending still going on out there. As long as the plans are thought out, as long as you can defend what you present, and as long as you aren't asking for the world, I think there's really good opportunities out there for everybody. So.
Terrific. So I just wanted to pause at this point and just, if you have questions as we're going along, the panel are open to taking questions, not having to wait till the end and go back. So if there's something that's on your mind, something that you want to ask Ernie, Mark, or Gabriel, just pop it in the Q&A, and Lee will stop me at the right point. So
Dominic, you have a question here that did come in. Mark had raised something about EIDL funding, and that has not been capitalized on by a lot of the business owners. Is it still available, and why haven't people, business owners, taken advantage of that?
Yeah, so I think I referenced the Main Street lending program that wasn't really taken advantage of as much. The EIDL was limited to $10,000, so I think that provided some limited relief to businesses. But the Main Street lending program, when it was rolled out, a lot of banks looked at it, and Middlesex included, and have opted not to participate in that for at least for the time being. And I think a lot of banks just couldn't get comfortable with the security position that they were in with the feds. Really, the way that program worked was the bank would lend the money, and the feds would take a large percentage of the bank as a of the loan as a participation. But most banks and the attorneys I've spoken to, most banks haven't been able to get real comfortable with the pari passu nature of the loans with the feds. So that's kind of why we've taken a wait and see attitude on that. But there's a fair amount of money out there, and the programs seem to be good. I think if the Treasury can see its way clear to having the bank in a first position and Treasury in a second position, we'd all be a lot more comfortable with it. But that's where we are for the time being.
All right. Awesome. So we've talked a little bit about the government loan programs, and we've been in this pandemic for what, 6 months at least now, right? So and the outlook is uncertain right now. So I just want to kind of ask, like, what is front and center for you as bankers and as lenders right now? Mark, do you want to go first on that?
Yeah, I mean, I'll talk about let's say the short and medium term. For us, it's bankers hate surprises, so that's why we're asking our borrowers and customers to provide us with that 13-week cash forecast, reforecast budgets, and really what's front and center is staying in front of customers and understanding where they are and how they got there and what the plan is to work their way out. And as I mentioned earlier, working with them to provide loan payment deferrals and covenant modifications and waivers. We need to see a plan, and Ernie harped on that as well a little bit. We need to see what the plan is in order for us to get comfortable of, starting to waive payments or defer payments. So that's what we're doing in the kind of short to medium term. Happy to talk about the long term as well, but
So the 13-week plan, presumably there's a lot of back and forth on the viability of some of these plans, I can imagine. Gabrielle, anything that you'd like to kind of add on or to what Mark has said?
Yeah, there's still a ton of opportunity out in the market, right? So if you want to find a silver lining or something a little bit positive to hang on to in your outlook through all of this, we are still in a phase of aging baby boomers and retiring business owners, and there's significantly less family and internal succession happening than there has been in historic generations. And so, as I've mentioned, we do a fair amount of acquisition financing, and there is a ton of capital out there in the market from private equity and other family office investors, from banks. Banks were very healthy going into this. So there is capital available for your business. I wouldn't be afraid to ask and have these questions, or, speak to your advisors, of course, but perhaps that is a good time to start transitioning your ownership. We're seeing a lot of business owners that weren't maybe ready to sell, and now they're saying, I'm out, I don't have it in me anymore. I want to go spend time with my family. So there's a lot of money out there. So I think starting to think about your transition plans is extremely important. We're not seeing a lot of change in enterprise value and purchase multiples of business, small and large. So it's a really interesting time, at least in the acquisition deal space. It went quiet for a couple of months, but it's very much picked back up, and we're seeing a ton of activity in the last quarter and going into Q4 for sure.
That's really interesting. It's not something that I had necessarily thought, but as you're saying that and it's playing back to me, it makes total sense that people are changing some of the plans that they had around things like succession. And to your point, you shouldn't be afraid to ask. These are some of the things that you can be having conversations about right now. Ernie, I'd like to ask you, you know, for what's front and center for you, you know, right now in terms of this outlook, you know, that's so uncertain, I guess.
You know, I think in some of the conversations we had, I made a statement that the around the outlook being uncertain is somewhat being not true. And as Gabriel said, there's a lot of money out in the street. So when you think about money out in the world, the money didn't disappear. Just everything changed. It all went someplace else. And if you're an entrepreneurial person and you're aggressive, it's up to you to go out there and hunt that down, find out where it is, and then bring it back and put it together and either present it back to your bank or take advantage of some of the other ways to monetize your company and build a working capital base, your cash flow, and go to the bank. I've seen some companies that approach me in February looking for money. They could survive till June. They changed the whole scope of what they were doing. They did $2 million in sales last year. They're doing $2 million a month in sales this year. Where did that come from? And Mark's shaking his head yes, and I know Gabriel's seen clients like that too. So it's a matter of putting your thinking cap on, you know, pulling up your Yankee stomping boots and get out there in the swamp and find the money. It's there.
Wow. So the money is there. It's just in times like these, it changes hands. And I like kind of what you said there about the swamp. Your job is to go and find it. There's got to be some questions there from people people that are dialed in for that. They want to hear more on that, Ernie, for sure. So I'm going to pause. Lee, are we good in terms of Q&A for now?
I think the big comment is, you know, how are businesses adapting to what Ernie just described? How are they the ones that are on the forefront of change? What's fueling that for them?
If you'd like me to field that, I think, you know, the best thing I can tell you is that I think that business owners need to look at, you know, what business they're in and what they're doing. They might look at the special skills and special talents they have and other alternatives they can apply them to and take advantage of, and have it start right there. I think a lot of times employees within a company have answers that the owners don't have, and they should explore those. So it's kind of a time to put the thinking cap on and break out. I think one of the very, very hard parts, and this is a reality, is that there are some business niches that are in really tough spots. They don't have a way to go forward. And that's just a sad bill of facts. But, you know, companies that are willing to go to, I'll give you an example, garment manufacturer down in New Jersey. So making cold weather garments for 10 years. And right now, he can't keep up with the orders for hospital gowns and also cloth gauntlets. So same machines, different product, different opportunity. Now, an exception of the rule, sure, but he looked at it and he said, you know, I can pack my bags and not sell any cold weather gear, or I can put my machines to work doing something else. And now I just have to find that market. So this is the thought process. You know, the other company I talked to that went from small sales last year to monthly sales exceeding last year's, they went from selling wholesale to selling online and put a whole plan together to do it. And they talked to me, they ended up going back to their bank. The bank financed what they were going to do because they believed in the plan. It made sense. So there's good opportunities out there. Is everything going to be perfect? Nope, but that's why they call people entrepreneurs. That's part of it.
Mark, Gabrielle, anything you want to add to that?
Yeah, I'll take just a quick comment. You know, what Ernie's talking about is you know, a strong team at the company, right? And that's not only operationally and financially experienced and knowledgeable in the industry, but one that's open and entrepreneurial, right? And you know, a team that's open to new products, ideas, product lines, and that are innovative and can recognize and capitalize on new opportunities. I mean, that's, you know, Ernie mentioned the company in New Jersey that's you know, doing 12 times their sales now, which, you know, is fantastic. We see companies within the bank who are pivoting to other products or other services that either didn't exist before or they didn't realize that that was something they could capitalize on. So we're seeing it every day at how companies are pivoting and taking advantage of opportunities that present themselves.
Terrific. So and thank you for that. And Ernie, when I think about what you said, it's about having that mindset about thinking differently, that there are opportunities that are out there, and really how do you capitalize on those? I wanted to just switch gears a little bit to talk about the relationship part of between the lender and the business, and how important that is in these times. So for those companies that are looking not just to survive, but potentially thrive and grow during these times, what's most critical for them to know? Mark, do you want to kick that one off?
Yeah, I mean, as far as relationships go, I think a business owner's relationship with his or her CPA, lawyer, financial advisor, banker, those are all there to help the business owner leverage as much success as possible, right? And lean on those folks, right? When a bank can't help, we try to refer it. If I can't help a customer, I may refer it to Gabriel, right? And because it might fit Prov Bank's or BankProv's wheelhouse a little bit better than ours currently, and vice versa. And having those relationships within the company, as well as the relationships that those advisors can provide to the business owners. There's always, Ernie knows a guy who can do this, and Gabriel knows a person that can do this, and I know a person that can do that, and we all have our group of trusted advisors and people that we can depend on to ask questions of and potentially help our customers. So I think the relationships are key. All of those relationships. The banker, the CPA, the lawyer, and the financial advisor, those are all, very, very important, even more important now than they ever have been before. So, continue to cultivate those. And if your banker hasn't called you over the last couple of months, you should probably give him or her a call.
So if your banker hasn't called you, give him or her a call. So that's a key takeaway that I'm making, that you should be in constant dialogue on all these things. Ernie, anything that you wanted to add to that question on the whole relationship angle of all of this?
Yeah, I think it's very important all the way along the line that borrowers are in good communication with their funders and lenders anyway. They shouldn't be their enemy, they should be their ally. And as Mark said, nobody wants a surprise. And the other thing is that, to me, if you're not communicating with your lender, I don't want to say you're kind of being a little bit guilty of being fraudulent, but you're somewhat misrepresenting yourself, and you're kind of keeping them in a guessing game all the time. And it shouldn't be a wait and see and what happened to me type situation. It should be an informative relationship that works, because that's what's going to bolster confidence. And if you are one of those companies that identifies a great opportunity and you've had those communication lines open, then that lender knows that you're serious about making this thing going. And that's where they're going to put their bucks. I mean, they don't want to be in the situation that this person just comes up with this crack and bull idea out of nowhere. They want to kind of be talking about this thing and see where it's going and make sure you're serious and it's going to happen. And I think that that's one of the most important things during this time, is that goes on, because even if you do have an opportunity and it may not be the perfect fit for the bank or bank A or bank B or even me, we're probably going to know somebody that can help you out with that, and that's really important. And that's where I think if you look at Gabriel, Mark, and I as resources, the information base and the contact base we have would probably stymie most people, but we're always open book and we're always there to help, and that's just part of the nature of us.
The takeaway there presumably is for those that are looking at a situation like right now, it's probably never been more important to have that relationship, that open dialogue with your banker or alternative source of funding. It's probably never been more important. And Ernie, you mentioned as well there about you want to have it, you don't want to kind of hide it. You want to be having those conversations all the time, because that is what builds credibility and trust. And you need that team. You need that team around you. So that's really interesting on the communication. Gabrielle, anything to add from your perspective?
No, I think we can't really reiterate enough how, well, that we don't like surprises, right? And to never be afraid to just ask the question, what's available? Here's what I'm dealing with. Can the bank help? Do you have other ideas? What capital is out there? We're all well networked, and we typically have some suggestions, whether it's us or somebody else.
Yeah. That's great. You guys don't seem like scary people to me, but that thing of like people, you want to encourage businesses to have conversations with you, not to be in the dark, not to leave it to the last minute, but to have that kind of dialogue. And I was just curious, I wanted to ask you this, Gabrielle, about what do you do in a situation where you can't help? You can't help, you have a business, they have a plan, there's some things, some opportunities, but you're not in a position to be able to help them. So what do you do when you can't help, I guess, and the bank can't help? What do you do?
Yeah, Mark touched on this a little bit in his last comments, but despite what you might think, our industry is all pretty friendly, right? And we all know each other really well. And so I have a really good idea of stuff that Mark does similar or different than what I might be able to do at BankProv. And same for most of the other banks in town. So whether there's an opportunity that comes across our desk that's not a right fit for our banks, we typically know if there's another bank in town, regionally or even nationally, that maybe has a different risk appetite or different industries that they're into, different requirements, different covenants that they might offer that be a better fit for the deal. And we can make those introductions. This isn't a good fit for us. Like, it's always great to be able to say no, but instead of just no, sorry. And so if it's not another traditional bank, there's plenty of alternative funding sources out there. So, certainly all the non-bank financing that Ernie has access to that he can talk a little bit more about. We all know a bunch of mezz lenders out there. It's a little bit more expensive capital, but there's opportunities for non-bank financing. And perhaps it's private equity that, that doesn't necessarily mean you have to sell the business. There's a lot of capital out there for someone to buy into your business, to invest in your business and help you be able to continue to grow and run your company. And so trusting the advisors you have and trusting your banker to be able to ask those questions, is really critical. We have a business owner now that calls. He said, my number one competitor called me last week and said, I'm retiring. Would you like to buy my business before I take it to market? And we were his very first phone call, right? Hey, this guy just called me. Here's some quick numbers. Is this something you can finance? The answer is, of course, thankfully on that one. But there's our opportunity for us to bring some outside investors into that deal as well. So, perfect real-time example.
Yeah, no, that's great. And I love the line that you said there of can you help? No, but I know somebody that can. So you're bringing that whole breadth of all the other relationships and maybe people like Mark, who does have space in his portfolio for it. So that's really interesting. Ernie, can I just kind of, kick your pulse on this one, because you're not in the banking space. So talk a little bit about where you fit in exactly on this when the bank says no.
So there's two situations. There's a lot of times where you have a company that has a bank loan or bank line in place, and they need extra help. And a lot of that takes place a lot of times, like right now, the PPE area, purchase order financing has been absolutely going crazy. But with that also comes a lot of fraud. And that's all kind of hand in hand, mainly because there's people involved and there's money involved. When those two mix up, you get that. So that's part of that world. So when we're dealing with companies that are trying to do things that are outside of their bank loan or outside of their bank covenant, we work hand in hand with the banks that are involved, because the bank wants to make sure their collateral is protected and that there isn't a bad risk being taken. So we're going to review this all, with the banks that are involved and structure what we call an intercreditor agreement. So we're able to work with a new opportunity, but we leave the rest of the collateral and opportunity with the bank, and we don't affect that. All in all, what we're really doing is we're adding sales to the business owner, and that helps fortify the bank's position. So hand in hand, it can work out very well. Where the difficulty tends to come, and you talked about this, Dominic, was that the money might go, Gabriel, that the money is going to be a little bit more expensive. So let's talk about the mindset of the business owner that wants to talk to me to try to help them, either in addition to or as an alternative to a bank. If you want to make a 30% profit on $100,000 of sales and you're happy with that, great. If you don't mind making a 25% profit on $500,000 worth of sales, then we should talk. And if you can't understand the difference between those two things, then we shouldn't be even having a conversation. Now, is my money going to cost 5%? No. But I'd rather stick a shock you in the beginning and you say, wow, this is a great deal afterwards, than turn around and say it might be a couple of percent difference. But that's the mindset that somebody has to have. What do you want to do that way? And then the other thing that is a great asset right now is when we get into purchase order financing or factoring, the reason the money actually costs more is because we do all the credit research for all of your customers all the time. And that's going to take place when you move into an asset-based loan with a bank. They're going to be watching your customer credit. And that's something right now has been a very important part of things in a lot of what we've been doing. So, so it's kind of where I would see this stuff fitting in. So it's really a relationship between us. It might be a bank, it might be the borrower, it could be a couple of different lenders, but we'll look at trying to figure out a way to make it happen so that it all makes sense and that everybody's comfortable with everybody, and that it's really a team effort and not just kind of a I'm in this for me, but from any of the aspect.
So there are alternatives out there. It sounds like you also collaborate with the bankers as well. It's not like you're at odds with each other necessarily, but you kind of want to help get a resolution where that is viable and makes sense.
Yeah, like a great example. I had a company wanted to buy a new machine to try an alternate product. They went down to the bank. The bank wasn't quite comfortable with it, and they said, we want to go and do this. And the first question I said to the owner was, what's this going to do to your covenants with the bank? He said, what do you mean? I said, there's got to be a debt service. I said, you got to have a debt relationship. And I said, if you change that and they don't know that, they'll call you a loan, and they should. And we ended up going down and sitting down with the bank and going through things. And the bank said, okay, we're going to allow you to do this. Now, if I hadn't gone to bat for him and he'd have just bought that piece of equipment, I could see Mark licking his chops saying, that would have been the mistake of the day. And something, rightfully so. That to me is kind of one of these things that we're talking about here, is communicate with your lenders, make sure they're fully aware of what's there. I really haven't had too many situations where I've seen a lender not be supportive of a new step aside. Would they lend the money themselves? No. Would they allow somebody to come in and help? Definitely strong consideration, if not a yes. Every time I've been involved in it. So.
Yeah, I mean that's a good point. I mean, it's not like the customer has to go with either the bank or Ernie, right? We can certainly coexist. Banks coexist all the time with Ernie, right? In the worst case scenario, they go from the bank to Ernie, and then they come back after Ernie's kind of got them on track, right? And can qualify for conventional financing again. So yeah, we certainly can coexist on that.
Terrific. Lee, how are we doing on the Q&A? I had one more question I want to.
Yeah, one person was asking Ernie's company name, Business Funding Northeast. And for all of the participants, we will be posting at the end of the presentation all the contact information for Gabrielle, Mark, and Ernie as well. So we'll be providing that.
Terrific. So just I had kind of one final question to kind of, all that we've discussed today to kind of, tie it up in a little bit of bow for the listeners. So it is, what is the one takeaway or opportunity or thing that you'd like to share for business owners for navigating this crisis, whether it's surviving or growing your business? What's the one key thing you'd like them to leave with? So Mark, why don't you go first?
Yeah, I think, I think Ernie said it before, maybe it was Gabriel, but the bank really is there to help, right? And the borrower shouldn't be shy or reluctant to call the banker. And as I said earlier, the banker should have been in touch with them months and months ago anyway. But don't be shy and lay things out and just say, look, this is how we've been impacted, and we're going to violate this covenant. And hey, by the way, we might violate next quarter's covenant too. So be open. Do your rolling 13-week cash forecasts. Work with your advisors. Because look, we are there to help. Covenants can be waived and lines of credit can be extended. And we don't want to call a loan on you, right? I mean, we just simply not what we're in the business of doing. We're in the business of lending and then slowly receiving that money back. And in this environment, if that takes an extra couple of covenant waivers or extensions of lines of credit, we're there to help, but there has to be a plan in place.
Gabrielle, how about you? Your nugget as a takeaway?
I think mine is just to be nimble. I've been a commercial lender for 15 years, and we're certainly in uncharted waters. We're all rolling through this together. And so think about ways you can diversify your business. If you don't have a digital or presence, it's time. It's beyond time to do that. But just thinking of different strategies and relying on your advisors to help you through that. But so mine's be nimble.
Be nimble. Jack, be nimble. Ernie, over to you. What nugget or nuggets of wisdom would you like people to leave with?
I agree very much, with Mark and Gabriel and what they've both said. I think that companies have to be very careful not to get themselves into a single faceted, I have no way out type situation. And don't get me wrong, there's some great businesses that produce a lot of money that are like that. But when the environment around you changes, if you're not prepared for that, you got real problems. And I think that business owners, if they had a good learning experience from this, they should sit down some Saturday night and think about, what the hell would I do if I get up Monday morning and this goes wrong? And it could be everything from who supplies to you, the government making a change in the law about what you sell. It could be what's going on here with this COVID virus, but you need to think about what you're going to do when I'm going to say when the mud hits the fan, because it is one of those things that you have to be prepared for that. And I think from that, you should explore the assets and the opportunities that your company has. So at least you got some idea of where you're going to go, just in case what if happens. And that's it.
Terrific. Any other final comments?
None from me. Thanks so much for having me.
Not at all. Lee, anything in the chat?
Few observations from very astute attendees today. Communication is really key, and a lot of things look at opportunities as opposed to obstacles in what you can do. I think Ernie gave a great example of that. Communication was what Mark talked about, and Gabrielle as well, that business owners are not in this alone, and that today's panel, as well as our future panels, are allies to a business to help them grow. They're not adversaries. So I think that we'll be addressing the other pieces to this puzzle for business owners going forward that will help put this together for them.
Yeah, that's a great point, Lee. And they're here to help. They're not adversaries. And I just wanted to give a heads up, because this is a series. This has been the first one, but the second one is next week. It's at Wednesday, October 7th. And the panel, which includes myself and Peter Arminetti and Mark Parent, is going to be all about kind of your internal team, like how do you mobilize your finance and operations to be able to work through with your internal team. A lot of today has been about talking about the external team. But I wanted to kind of round things up by thanking our panelists. You know, this is a huge, huge topic that you have very efficiently covered in a very short space of time. I know that I've learned a lot, and I'm sure that those who have dialed in today have as well. So I wanted to thank you so much for your preparation and your insight that you've shared today. I'd like to thank our panelists, or sorry, not our panelists, our audience as well for dialing in. I also wanted to make them aware that if you've dialed in today and you have a question, something maybe that someone has said on the panel that's prompted you, maybe you want to find out more, feel free to reach out to them. Here are their contact details for each person, but as you can see, they're pretty reasonable people. They're certainly open to having conversations and help, whether that's them or connecting. So I just encourage you, you know, if you have a question, just reach out to one of the panelists. But other than that, I wanted to thank everybody for their involvement today, and I hope that you can join one of our follow-up sessions over the coming weeks. And for those that have registered today, you'll be getting an email that will show you the list of upcoming sessions. I'm just going to call it up here at the beginning. So these are the ones that are coming up over the following weeks. So with that, I will end it there. And thank you all for joining us today. Thank you.
Great. Thank you, Dominic.
Thank you.
Thank you.